Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a very beautiful weekend as well. And in today's action, well, we have a little bit of apprehension leading into Wednesday's huge meeting with Jerome Powell and the Federal Reserve for a possible 0.25% interest rate cut. As you can see right here, the SPY and the QQQ were down today, but not only them, a large portion of the market, which actually pulling back in apprehension of such a big day coming upon us on the Wednesday session. Now, I truly don't believe that we're going to have much price action before Wednesday. We do have a lot of space here for some possible consolidation into that Wednesday event, but we know Wednesday is going to be make or break for the markets. There's going to be a lot of commentary surrounding the jobs market, a lot of commentary surrounding the possible impacts of inflation. And so as a result, even though we are coming into Wednesday with very high rate cut odds, I do not really believe that the most important aspect of the meeting will indeed be the rate cut itself. No, it'll be the tone that Jerome Powell talks about the jobs market, the inflation, and how we possibly see the rate cut path into 2026. As you guys do know at this point in time that the Wednesday meeting comes with the good old SEP, the Summary of Economic Projections, basically the Fed's projections on things like GDP, the unemployment rate, the inflation rate, and the path of interest rate cuts into 2026. So what will our Fed members present to us in terms of their economic projections for next year? That is probably going to be the most important portion of Wednesday's meeting. So in today's video, guys, we have a lot of things to take care of. Number one, we'll go over some news headlines, some breaking things that happened today. Of course, we're going to talk about the huge bid from Paramount. Once again, Paramount and Netflix going at each other for a possible bid of Warner Brothers Discovery. And then we have other news, such as President Trump authorizing the sale of NVIDIA H200 chips into China, and a few other components that we'll take care of at the same time. So we'll go over some of those news headlines to start off the video. Thereafter, we will go into our technical analysis portion of the video. Going to be very important to kind of set the table for this week. Where are we at on the SPY, the Qs? If we do pull back, where can we pull back into? And we'll go just run through all of our sectors, check on the rotation, see which sectors are doing better than others, leading into the very important day of Wednesday. Thereafter, we will do the same thing across our big tech list right here. As you can see, very mixed market today. Some names were up, a lot of names were down though. So of these names, which can be possible nice swing trade opportunities coming into the end of December and into 2026, and otherwise, which of these represent good buying opportunities for the long-term portfolios? At the very end of the video, I will show you guys the biggest gainers and losers, and we'll run through a few key names here and derive some possible trade ideas. And at the very end of the video, if we do have some time, I'll take you guys through my portfolio just to show you how I am positioned into this week. I'm positioned a little bit lighter than usual into the week, but I do have some very nice core positions that I'll take you guys through as well. And that's going to be it for today, guys. In terms of the earnings, I know I promised that I would be covering the earnings from last week that we mixed. Sorry, this is this week's earnings. Well, while we're here, I mean, this week we do have earnings on Oracle, Adobe, Broadcom, big earnings coming on to the Wednesday and Thursday session. But tomorrow, I haven't had the time to do them just yet. My apologies. Tomorrow, I'll be taking you guys through earnings. I think I lost them, unfortunately. Yeah, we'll be taking you guys through the earnings calendar from last year. Some of the names that we missed, such as UiPath, such as Rubrik, such as SentinelOne. I promise you guys, I will do them tomorrow after the market closes. I've been very busy in the past few days, so thanks very much for understanding. And that should be it for today's video, guys. So let's get right into the action, shall we? The S&P down about 0.3, the Qs down about 0.2%, and all across the board, we had some weakness, right? Not too good in terms of market breadth today. Only Microsoft, Oracle, and some of your semiconductor names were able to kind of hold us up from a pure big bleed in the S&P and the Qs. That being said, the rest of the market, nowhere to be found, right? Financials, not a very good day for them. Healthcare continues its pullback after carrying the markets for a good portion of the month of November, now in a healthy pullback period. And the bottom half of the market here kind of struggling with yields. There's been something very curious happening with yields recently, and you might notice here on the 10 and 20, we've really started ramping. Since when? Since the end of quantitative tightening on December the 1st, this is basically the bond market saying that they believe that the Fed is making a mistake or two. Either one, they don't agree with the rate cut that's going to be coming on the Wednesday session, or number two, they don't agree that it's the correct time for the Fed to be ending the runoff of its balance sheet, and or the bond market might still be concerned with the federal level of debt at the in terms of the U.S. government debt overall, right? So this, we've been talking about the bond trade for a very long time, the yield trade for a very long time. it is a very complex trade with lots of moving parts, lots of bond vigilantes calling out the Federal Reserve's policies. And you can see that in the yield. So there's been a big push and pull here on the 10 and the 20, and that is definitely impacting some of your lower sectors in the market here, especially sectors like real estate and utilities, and even to a certain extent, some of your industrial plays. So the breadth there was definitely not present today. Moving on further down on the one-day relative, you can see that even better. Only technology, helped largely by NVIDIA and crew, right? Only technology making it out today with a bit of a gain. Everything else to the downside, sadly. And on your 1 week relative performance, well, even though we are still very close to all-time highs and we haven't really pulled back much, right? You can see a bit of a pullback here in terms of breadth. And we were talking about that into last week, how we had a very nice thrust on our breadth. Percentage of stocks above their 20-day EMAs went from a very low read of 26% of all stocks up to about 73. And we were also saying that this can possibly move in waves. But when you had such a nice thrust on the overall broad market, it's very normal to see some pullbacks, especially leading into a very important day, Wednesday, of course, with the Fed meeting. Percentage of stocks above their 50-day EMA, same concept, right? Nice little thrust here from 30 all the way up to about 56% of all stocks above their 50-day EMAs. And now we are seeing a slight little pullback, and the percentage of stocks above their 200-day EMA, also decent little thrust here from 47% all the way up to 60%, and now just pulling back, right? So I wouldn't say there's any red flags, but the market, as you guys know, does move in waves, and this is just another one of a small wave of consolidation to the downside. On the 1 week relative, you still have a couple outperformers here, technology, industrials, and financials. However, we have lost a good segment of the market here over the last couple days of trade, as the market has been pretty choppy, let's be honest. You know what I mean? In the last 4 or 5 days, the S&P really hasn't done much at all, right? Take a look here. We're just not moving, you know, and I do think that that's just because people are waiting to position in terms of all the policy announcements that could be made come the Wednesday session, and especially the projections for 2026 overall. So before we get into more technical analysis, guys, let us just run through a few key, a few noteworthy news headlines that I thought I would bring to you guys today. Number one, we got to talk about the constant battle between Paramount and Netflix. Paramount coming over the top now today with a $108 billion hostile bid for Warner Brothers Discovery. Now, Netflix and Warner Brothers have a signed tentative deal. That's between Netflix and the board of directors, but these deals do need to be approved at the end of the day by shareholders as well. And essentially what a hostile bid is, basically Paramount is coming over the top, over the board, and is appealing directly to the shareholders at this point, because obviously this is a buyout in terms of price per share. Now, Netflix, currently, the buyout stands at about $26 per share, and right now Paramount is offering $30 per share. So if the shareholders want to circumvent the board and just basically vote this deal into play, that could possibly be a, something that could happen. But of course, this deal is going to go back and forth. It still remains to be seen what the board can do in terms of Warner Brothers, in terms of authorizing this latest takeover bid or denying it and putting the vote into the hands of the shareholders thereafter. It's a very complex deal, right? But how is Paramount actually raising the money for this? Well, in a few different ways. Number one, they're raising financing from banks. They're raising funds from sovereign entities, especially the Saudis in this case. And they're being backed by Jared Kushner's firm, which there's been a lot of political back and forth. You guys know that Jared Kushner is President Trump's son-in-law, of course, right? And he's coming in, pretty much providing some private equity for this deal. Obviously, you guys know which side of the aisle David Ellison is on as well, right? Larry Ellison's son from Oracle. So there's a lot of politics involved in this deal overall. I'm just here to kind of report the news and just tell you guys what this deal could possibly do. Number one, it has to be approved by the board. And number two, if the board doesn't approve it, and shareholders have a say in this as well. That's why they call it a hostile takeover bid, right? They're appealing directly to the shareholders. So we'll keep an eye on this. There should be many more news pieces over the next few days, few weeks, as this deal kind of unravels in front of us. Moving on further here, this was a big piece of news released this afternoon. President Trump coming out and authorizing the sale of NVIDIA H200 products. So he has informed President Xi that the U.S. will allow the H200 products to approved customers in China and other countries under conditions that allow for continued strong national security. President Xi responded positively. 25% with a dollar sign there, I guess it's percent, will be paid to the United States of America. The policy will support American jobs, strengthen U.S. manufacturing, and benefit American taxpayers. That was very bullish, obviously, for NVIDIA's stock price throughout the day, which was kind of oscillating wildly before and after that deal was announced. You can see here is when the deal was announced, right? Tentatively, because it was reported by an independent news source. And then it was kind of, reported formally by President Trump on his Truth Social platform. And you can see the ensuing bullish move here in the after hours on NVIDIA, up an additional about 1.5% after closing up 1.72 today. So this is a big piece of news today, arguably the biggest. Now, there are other smaller things that happened today. Waymo was crossing 450,000 weekly paid rides as Alphabet robotaxi unit widens the lead on Tesla. Now, this is also going to be something to carefully watch over the next 6, 9, 12, 18 months. The constant battle between Waymo and Tesla. I think that competition is obviously very good. The companies will be pushing each other to roll out technology faster and faster and try to get mass adoption faster and faster, which is a good thing. So we'll be monitoring closely these highlights between Waymo and Tesla as they kind of move on. Another piece of news as well, Google saying that the first AI glasses with Gemini will arrive in 2026. You may remember Google talked about this earlier in March and April. They have a deal with Warby Parker to roll out these AI glasses. The AI glasses will be somewhat similar to Meta's Ray-Bans with a few extra augmented features. So we'll be able to see the battle of the smart glasses between Google and Meta throughout 2026. This should be a pretty cool product rollout, and I am definitely looking forward to it. Moving on further, investors, how are we feeling about 2026? Because we know 2025, I mean, if you look at the ETFs, the SPY's up 15, the Qs are also up roughly 15. It seems to have been a fairly easy year, but really was it that easy? We had big narratives all throughout this year. Tariffs, then you had AI, and then now we're kind of unwinding some of the AI. People are calling it a bubble, right? So in all reality, there were segments of this year that were easy, but other segments of this year that were indeed quite challenging. You have a few bearish catalysts on the table, like what's happening with the jobs market. Will inflation from tariffs still actually hit? Is the Federal Reserve behind on its rate cuts? And is AI indeed a bubble? And is OpenAI good for its $1.4 trillion in capital spend commitments? All very valid questions. So you can clearly see that we're coming into 2026 with a lot of cloudy narratives ahead of us. However, when you take a look at the manager fund survey here, 39 investment managers responding from the US, Europe, and Asia, 30 of them are still risk on. So a majority of them still saying they're risk on into 2026, 3 of them saying they're risk off, and 4 with a bit of a mixed view, right? So we'll keep an eye on what's going to happen for 2026. Obviously, there's a lot of short-term bearish narratives. However, it is also very difficult to be flat out bearish on this market. We know that next year we're getting a few key things. Number 1, $4 trillion in tax cuts. Number 2, further interest rate cuts from the Federal Reserve. Number 3, the end of quantitative tightening and how that is going to work its way into the market as well. The money printer is still not on, of course. Number 4, we also have very positive earnings outlooks from not only big tech, but a majority of the S&P. We just heard about that during Q3 earnings. And additionally, you have some deregulation practices from the Trump administration and obviously the whole infrastructure boom that AI is causing. So, and you also have a pro-market administration, right? To where the Trump administration seems as though they want to do everything in their power to kind of uphold the markets, because we know it's a K-shaped economy right now. And the bottom half, right, the lower end of the consumer is very much struggling. Although the top 10% of income earners are doing 50, 60% of the spending. If you lose the markets, you lose those guys, because the only reason they're spending is because they have assets, and their assets have been doing good, right? So the Trump administration obviously knows that. So they want to keep the markets high to eventually try and get the economy to broaden out a little bit. And that's the importance of the interest rate cuts. Interest rate cuts, guys, don't help the best and strongest companies in the world like the Mag 7. No, they help a whole bunch of other consumer-facing companies, and they help the consumer itself, right? So all of those things make up the great big puzzle that is the market right now. But if you survey a lot of very large money managers and investment managers, apparently most of them are still bullish, very curious, and we'll keep an eye on investor sentiment, or rather investment manager sentiment, into the new year as well. Moving on further, consumers. How are the consumers feeling? We heard how investment managers are feeling, and we know how the top 10% are feeling, of course. They're feeling very, very wealthy. But what about the rest of the consumer here? Well, we got Michigan consumer sentiment last Friday, but I didn't see you guys last Friday, and it was an all-time low read. Well, not all-time low, but very low read. Apparently, consumers are feeling worse off than during a global pandemic, which was the bottom of 2020. They're feeling worse off than the lows of the great financial crisis, which my head is in the way, but you can see the line stops there. And they're also feeling worse than in the 1980s double dip recession. However, we know that that's very curious because we also just got record Black Friday sales data. And when we took a look at the most recent Q3 earnings in terms of the bank earnings, in terms of the credit card earnings, in terms of certain travel company earnings, right? Consumers are still spending, but they're being very picky about what they choose to spend on. However, everybody's anecdotal experience right now is that prices remain high after a few years of inflation, and people are being pinched by the pennies essentially because of those prices. And as a result, the consumer is feeling weak. They're still spending their money per the data that we do have, but they're not feeling the best about the sentiment right now of the overall economy. So this is also something that we've paid attention to all year since tariffs, and we will continue to pay attention to this one very closely as well and kind of try to reconcile that with the actual spending data and income data that we're getting every single few weeks. Additionally, one more thing that came out today. This was interesting by The Economist, which came over the course of the weekend. You got a bit of techno-pessimism right now, which is very normal. You might remember back in September and October, there was a lot of bullishness surrounding AI. All the AI names were absolutely flying, whether those were the quantum computing names, the small modular nuclear reactor names, such as Oklo and such as SMR, the data center names like NBIS, Iris Energy, CIFR, CoreWeave, and so many others. The Mag 7 names as well were doing pretty well, led by NVIDIA and AMD's gains too. And OpenAI was throwing around money everywhere, and it seems as though everybody could get a piece, and the AI trade was in full swing. But now, in the last month or so, look at this decline. This is Google search traffic for AI stocks. So I guess since the pullback, people have kind of gotten cold feet, and the AI bubble narrative has really taken root into a lot of people's minds right now. And your search trends for AI stocks are really, really, really low. Now, arguably, this could be a good time to buy because supposedly, well, not supposedly, but if you just look at this chart and you look at other stock charts, which we've been looking at over the last few weeks, the trade is no longer that crowded, not as crowded as it was at the end of September and into October as well. So we could still find some good buying opportunities for companies making actual revenues into 2026 and into 2027 through all that massive data center build out. And one last one that I have for you guys here is that 35% of all stocks are still in a bear market, down 20% from the one-year highs. Now, we know that market breadth has been an issue for a majority of this year. Several sectors, I would argue, have been in a bear market for a long time, call it a year and a half. Consumer staples, nothing good has been seen there in the last year and a half. Consumer discretionary as well. Nothing good has really happened there. Real estate has been muted as well. A good portion of industrial stocks have been very muted over the past year. And as a result, you have this statistic right here to where 35% of all stocks are in a bear market. And it's led to one of the largest divergences that I've seen in a very long time, arguably in my entire investing career at this point in time. Look at the discrepancy between the names here. Here are your year-to-date returns from some of our favorite companies, right? And if we just take the midpoint here, you know that there's 503 stocks in the S&P 500, but look at the break-even, right? The break-even is about 302. So you do have 302 names that are positive. So more names positive than negative on year-to-date gains. However, we have to compare it with the actual S&P. How many names are actually outperforming the S&P? You can see here that year to date, the S&P 500 is up roughly 16%. So when we come to this list right here, we want to see, well, how many companies are actually outperforming the S&P's 16? Now, I know obviously that a lot of this is led by big tech, that's for sure. But look, it's only 156 companies that are actually outperforming the benchmark. So a majority of the S&P is underwater, and underwater by a lot. Let's start off with the biggest winners though. Obviously, a lot of the memory companies, SanDisk, Western Digital, which are new inclusions to the S&P, at least SanDisk is, Robinhood, Seagate, another memory play, Micron, another memory play, Warner Brothers Discovery. The only reason that they're up is because people are bidding for their company. If not, they were kind of down in the mud for a long time. Palantir, Newmont Gold, Lam Research, AppLovin, Amphenol, another AI trade as well. Then you got Intel, thanks to the government deal as well, up 100%. And then so many of these names, as you can see, are either energy related to the data centers or, possibly the actual AI or hyperscaler names themselves. Now, there are a few other notable healthcare names, of course, but you can clearly see the trend of companies, the style of companies that are on the highs right now. If you take a look though, guys, I have very rarely seen such a wide divergence between the positive names on the S&P and then the truly sold off names at the complete bottom, right? Fiserv, we went over this one after earnings. Trade Desk, then you have Alexandria Real Estate Equities, Gartner down, ticker is IT, funny. Lululemon, Deckers Outdoor Brands, Molina Healthcare, Chipotle, Dow, FactSet, so many names. Look at Clorox. What did Clorox do? They're down 38% this year, right? Then you have all the other healthcare insurance companies such as United Health, Centene, Molina Healthcare. We talked about it down there as well. Copart, a super high quality business, that's down 33% year to date. Target, Pool Corporation, another very strong business, they're down 30% year to date, right? PayPal's down 28%. So many names are down 20, 25, 30%. Even Salesforce down 22%. Kimberly-Clark down 22%. There is such a very wide divergence right now between the AI names and everything else. It's like these companies are just getting no bids, no love whatsoever, but we've been covering this over the entire year so far. So our best hope for 2026 is that this market actually starts to broaden out away from the AI trade. The AI trade can still be in first position, but you would really like to see the market get some sustained breadth, because as we've been seeing recently, right, we're not getting the sustained breadth. We're getting glimpses of very nice breadth rallies, and then it just kind of slowly fades back to AI. Nice breadth rallies, and then just slowly fades back to AI. And it's been doing this pretty much all year. This is the percentage which talks about their 20-day and even the 50-day as well, right? We get glimpses of very strong market, overall market breadth, yeah? And then it just fades and just concentrates back into some of the AI names. And then when that usually happens, we culminate to a local S&P and QQQ top, and that's usually when you get a bit of a pullback and a bit of a correction, right? So that is what I'll be looking for into 2026, guys, is more indications that not only is the consumer in a better landscape, but also the broadening out of the overall market, because not all names at the bottom of this list are bad. You can actually find some very high quality companies this year that are either down or flat year to date, right? Look at all of this red. There are some very solid companies in here. If I just stop on one, MSCI, like what did they do to be down 10% this year, right? Now, some of these other companies have, are somewhat questionable, right? But even a company like Airbnb down here, 7%, right? Axon Enterprise, a former big winner, is now down 7% as well. So you don't need to look too far. And you can even see other high quality companies, which you talk about on a regular basis, right? SPGI, high quality company, a duopoly with Moody's Corporation, right? This company is currently down 2% year to date. Moody's Corporation, talking about them as well, that company right now is only up 2.5% year to date. They didn't do anything wrong. They've been pumping out really good earnings this entire year. And look at Visa and MasterCard. They've done nothing but post very good earnings this entire year. And take a look at Visa right now. Visa is currently only up 3% year to date. And MasterCard as well is only up 2% year to date. So into 2026, I'll be focusing on some of these high quality businesses that for ever which reason, just because they're not AI, I guess, have been left behind. Booking.com has posted nothing but solid earnings this entire year so far. Hasn't really helped their stock price though. They're only up under 4% year to date. So there are so many high quality companies that can possibly deserve some very good attention into 2026. So what I will personally be doing is diversifying a little bit into these companies. I mean, I've already been doing it for the past 2 months, but I will further do so. I'll still have my AI plays, and my AI plays will still probably be front and center in terms of the weight, but I will try to diversify my bets a little bit more into some names that are very high quality companies that have unfortunately just been left behind throughout this big divergence that we've seen throughout this entire year so far. So those were your early news headlines and a bit of a discussion, further discussion surrounding market breadth. Hopefully you guys enjoyed that. Now let's dive into some charts. So taking a look at our good old S&P 500. So they were down about 0.3%, but one thing is for sure, we've had a very nice last 10 days worth of a push, right? Which gives us a lot of space. We had the daily downtrend here, nice engulfing move. In the event that the Wednesday release by the Fed is not well received by the markets, we do have a lot of space here to kind of curl over, set a higher low, and possibly go for expansion into the end of the year. We will see what happens. I mean, we also have the juice to possibly just blow off the top if Jerome Powell is very nice to us and gives us a dovish speech and a dovish outlook on the economy. So it's very difficult, and you guys know me, I never try to predict these things, right? We just do if-then statements. If we come down into here, we do have very nice support, and we could be looking for some higher low bids to possibly go for the upswing because we know we have a bullish leaning bias. The weekly uptrend is still in control by the bulls right now. The monthly is still not looking too bad either. That being said, if we do pull back, I will be looking for some buying opportunities in the form of either long-term portfolio buys or using my favorite type of order to handle some volatility and some pullbacks, which is selling puts under the market. So just so you guys know, a lot of space, anything above 651, looking for a new higher low for possible further trend continuation. Nice support down here, 674 to 666. And also your daily EMAs are down there too. And the weekly moving average is sitting right in that support range as well. So nice confluence in this little pocket that we have. Moving on the QQQs right now, same concept. It's been a very nice last 10 days worth of trade, but maybe the bulls are getting a little bit tired and a little bit apprehensive in terms of Wednesday. Daily downtrend has now been fully engulfed, and we do have a lot of space off these lows. Anything above 581, looking for a new higher low for possible further trend continuation. We will see what we get. If you pull down into this region, you will be looking to bulls provide a bit of support, 614 down about 605. So a lot of space, nice support below us. And if they give us a little bit of a downswing with a VIX increase, you guys know what I'll be doing, selling put options on my favorite companies under current market levels, but provided that they are high quality companies trading at decent multiples as well, which is what we focus on here on the channel. Moving on to the XLF financials bit right here. Well, financials, I mean, they caught a bit of a downswing today, but you would expect them to have a bit more of a downswing just because of yields. Yields are putting so much pressure on anything financials, anything utilities, et cetera, et cetera. And financials definitely felt it today, right? You had a large swath of the financial sector, which was down. The credit cards, Berkshire was down, but also they had a few executives kind of step down too. And the banks didn't really perform too well today. That being said, we do still control a nice daily uptrend, and we are above our most recent area of control, which is 53.30 down about 53, which is this previous resistance, support, resistance, resistance, resistance. So it should be a very big area for the markets. You would not like to see them do this, because then we would get right back into the gulag of consolidation, this tight little area the bulls and the bears have been battling since the month of June, right? So we'll keep an eye on this daily uptrend and how it goes, but so far, so good. The bulls are not looking too bad for some expansion. Obviously, you will need some pretty dovish comments, especially surrounding the direction of interest rates come Wednesday's meeting. If you want to see financials really start getting some lift, if you want to see the banks really start to kind of gain the levels, right? Because we've been having really topsy-turvy price action here since the month of October. Not big expansion. I mean, Goldman Sachs is just going for it right now. Morgan Stanley just going for it. But some of your more legacy banks, JP Morgan's been kind of stuck here. Bank of America, I mean, they're trying to make new highs, but we haven't really crossed November, right? So they're trying. Citigroup as well has been having some nice expansion. So you can see it's very mixed. Wells Fargo, some nice expansion. Charles Schwab, still kind of stuck. So it depends on the institution, but some components of this market have just been missing. Visa, MasterCard, right? American Express has been pulling back now and unable to make a new high. So you need a bit more breadth within the financial sector, because right now it is somewhat segmented. Moving on to XLV, healthcare continuing on for their pullback as well. The higher lows are right here, 151. Now, we've been talking about this all the way since the high, saying daily overbought conditions. We were also into weekly overbought conditions, into the previous all-time highs, and it would be very normal if the bulls get a bit tired here to possibly go into weekly consolidation, right? Now we've engulfed this daily move 100% of the way. Any move now, at this point in time, the V shape is somewhat unlikely, right? You would expect for this to translate into a lower high into lower low scenario possibly, and just further weekly consolidation. Now, it's a good thing the weekly bulls are in absolute full control right now, but we got a bit tired there at the top. And one area we've been highlighting for a pullback is the area that we seem to want to pull back into right now. 148 all the way down to 145. If we do pull back into this area, it'll be a very nice breakout retest on the weekly and even on the monthly, right? Monthly downtrend, engulfing move, and they're going for the good old cup and handle. So healthcare could be something as well, which would be very interesting to keep an eye out for come into 2026, especially if we get a back test here. Maybe you'll find me re-entering some healthcare positions, as I did exit here and here on the upswing. Moving on to SMH right now. SMH also not too bad, led of course to the upside by NVIDIA and a few other key players today. Daily downtrend has now significantly been reversed. Beautiful engulfing move and tons of space for semiconductors right now. An absolute truckload of space between us and these higher lows, 315. Any move lower on any market weakness would just be looking for a higher low for possible further trend continuation. Weekly consolidation was pretty good, coming down into the 12, setting up the higher lows and going for it, but If the markets are a bit choppy into the end of the year, maybe you just come into some awkward sideways consolidation, right? Kind of like we did, at certain periods of time, but I'm not willing to predict too much in terms of that, right? We should be getting some pretty good lift from NVIDIA earnings tomorrow. So we'll keep that in mind, not from other earnings, from the piece of news, this piece of news right here, yeah, the H200 news. So we'll see if NVIDIA can carry tomorrow, but if we do get some pullbacks, you guys know which names I'll be playing. I've been playing the same two names over and over the last 2 weeks, NVIDIA and AMD, using some short puts under the market. But nice to see some broadening out. I mean, we don't talk about it too much, but you've had a nice broadening out in semis. Texas Instruments finally getting some nice pops over the last few weeks. Qualcomm finally getting some nice pops over the last few weeks after being down. Other analog players such as On Semi, those moving decently higher. Names like MCHP also moving nicely off the lows. So you are seeing a broadening out within the semiconductor market, because previously it was legitimately only NVIDIA, Broadcom, Micron, AMD, and the semiconductor equipment players, the LRCXs of the world, the AMATs, et cetera, But there's so many other names that were kind of left behind. And now we're seeing all the names on the bottom of this list try to pull up as well. So that's a good thing to see. Moving on to the Russell right now, the Russell up 0.04%, still in the context of a nice daily uptrend. Pay attention to your higher low at about 245, right? You don't want to see us undercut this throughout this week after the Fed meeting. If you do that, guys, sadly, you can lead into the daily downtrend and you can lead into a bit more weekly consolidation. It's been a really nice engulfing move by the bulls, but it's very tough to call this one, right? Because we know they respond so much to interest rates and to possible policy projections, these growth stock names. So we'll keep an eye on it. The Russell is not looking too bad. I'm not playing the Russell, I'm playing individual companies, but the Russell is not looking too bad. In the event you come back down here, you'll probably also find some good opportunities on some smaller cap names if you're looking for that. Moving on to other things such as consumer defensives, right? Consumer staples, XLP, still very, very soft, but we're into multi-years worth of support right now. Big previous resistance area from 2021 and 2022 has been support all year, but you can see the problem, right? Consumer staples have done nothing, literally nothing all year. You have some outperformers such as Walmart printing the highs, such as Coca-Cola, which regained its all-time high region, but so many others, even big names, have done nothing. Costco continuing consolidation. I mean, it's at the top end of its valuation range, and I have been saying since here that this reminded me awkwardly of this period of time in Costco. I'm not calling for an absolute collapse, but could we just get stuck here as we consolidate and kind of, grow in to these very high multiples? Very probably. But other names, I mean, look at Procter & Gamble. Procter & Gamble hitting 52-week lows today. We talked about Clorox as well. Clorox just down here in the mud pretty much. And so many other names. I mean, Pepsi's recovered a little bit, but have they really recovered that much? Not too much at all. And there's so many other names like this in terms of consumer staples that have done absolutely nothing, which does lead me to believe that it's a nice trade opportunity, but it will be probably slow, right? You need to see the broadening out of this one through 2026, through 2027. So if we're looking to pivot some AI money into something, consumer staples is probably not a bad idea. Now, it's not as flashy, it's not as sexy, it doesn't run as hard as AI, but there's a lot of very strong dividend-paying companies, right, that are currently down 52-week lows, and there's not really much wrong with their business models other than the fact that some of them are kind of peaked in terms of pricing power just because of, the consumer landscape right now. But still, even like dividend funds or just this XLP ETF overall, if you want to avoid picking companies individually, not too bad of a play for some diversification or, just lowering the risk profile of a trading portfolio or otherwise, right? Consumer retail is not doing too bad. We know we had a really big push here coming out of Black Friday, very strong consumer retail, but even consumer retail, right? We haven't done anything, guys, for like a year and a half at this point in time. Sure, we're expanding very slowly. This one, if you're in the no recession camp, this one is probably one of the better trades. I mean, we don't need to look too far, right? Names like Chipotle have been just destroyed. Names like Kava, names like Nike, even though Nike is an execution problem story, right? Nike is still all the way down here. Decker's Outdoor Brands is all the way down here, although they have recovered a little bit. Names like Lululemon are just completely crushed. So I'm not going to bring up all the consumer charts, but you guys can get a good idea that most consumer retail names have not been having a good year at all, right? And the hopes are that the soft landing narrative is indeed the true narrative and we don't get a recession, that consumers are progressively over the next year or two able to regain pricing power and start shopping in a little bit of a more normalized fashion. So this one and XLP, staples and consumer discretionary retail, could be some nice, trades to position for a no recession scenario into 2026, 2027. They won't be the fastest movers, but when they start participating, they could participate a little bit hard. So starting to accumulate some of these positions with a thesis of expansion into the next 12, 18, 24 months as a positional trade, not the worst idea, but of course, I would never say there's no risk associated with this trade. The risk, of course, is a form of an unemployment short-term recession. It's going to be very tough to plunge the overall economy into a recession. But if the labor numbers get weaker and we have to kind of wait for more and more rate cuts and wait for that to trickle into the economy and possibly wait for a bit more stimulus, et cetera, through various different forms, well, obviously this one is going to take a lot longer to recover, right? So it's not without its risks, but the risk reward profile is somewhat attractive on either this ETF overall or on some consumer facing names. I mean, Amazon must be the biggest barometer for consumers right now, right? If consumers come back, their e-commerce business will probably boom again. So you can take individual names here and there if you're picky and choosy with them, or you can just go for the overall broad market ETFs. Moving on to utilities right now. Utilities is just in big consolidation right now, right? So we know that they were trying to find a local bottom here, trying to go for the uptrend shift. Completely unwound, and this is a majority of this move is kind of responsible from yields as well, right? They just are inversely correlated to the movement in yield, so not too much of a surprise right there. Weekly downtrend right now, unfortunately, that hasn't happened for a very long time, guys. So weekly downtrend means monthly consolidation, and where might we be heading? Possibly the 12 EMA. The bulls have done a good job defending this one since they've regained the bull market out of 2023, right? So we'll see. Historically, also the 12 and 26 proved to be the good lines of defense. So if I were looking for any utilities companies and players into 2026, well, soon might be the time to go shopping, whether your favorite names are something like Vistra Energy, right? Or maybe players like NextEra Energy, or maybe you want to play the turbines such as GE Vernova, which are not really a utility, but they do provide equipment for utilities, right? There's many different ways to play utilities, but the way that I would be playing them is try to find the ones that are closely tied to the data center expansion trade, because we know the power requirements are going to be absolutely massive. We've covered that several times on the channel over the last few weeks. Real estate market right now, I mean, the real estate ETF not doing too well, but that is also a byproduct of your 10 and 20-year yields, which have seen a massive increase here over the course of the last week and a half. So my favorite two segments of the real estate trade remain the mortgage brokers, which is a company like Rocket, but even Rocket's been coming down since the 10 and 20 have been spiking a little bit. So the mortgage companies and or the home builder companies, right? We know that they're trying to set up for the monthly shifts here into 2026, but they're going to need some cooperation from the Fed, of course, right? And they're going to need us to not have a recession. So overall, if we do see some downswings in here, if you are a fan of real estate, those would be the ones that you might want to position into, because REITs move very slowly, right? They're arguably last to move in a rate cutting cycle, just because the refinancing that those REITs have to do takes a long time. The ones that usually move the fastest are home builders and the mortgage companies. So keep that in mind. And lastly, energy. I mean, energy has been doing absolutely nothing. There was an interesting post on Twitter, which I forgot to save, my bad, but gas prices are at some of the lowest levels that we've seen in the last 4 or 5 years, but the energy sector overall is just very flat. Once again, if I were playing energy, I'd probably find some specific energy plays, whether they're the utilities companies that we talked about earlier, or whether you're going for, see, this energy segment here is largely just oil and natural gas. Those are the largest components of this ETF right here. I'm not playing oil companies. I'm not really playing natural gas companies, but I will play companies that have exposure to everything, like Vistra, right, which has exposure to nat gas, nuclear, solar, and battery storage, right? So that's how I'll be playing kind of the energy sector, but I'm not really interested in oil companies. That's a overall broad market rundown of our sectors and how we're maybe positioned into 2026 with the various narratives. I won't do that too much, but on Mondays and Fridays, I'll try to give you a better indication of the overall indexes here. In terms of the VIX, well, we have seen an uptick in the VIX today, 8% to the upside, possibly getting ready for the Fed meeting. Of course, if there is too much apprehension and then the Fed's dovish with us, we'll unwind the VIX. But if not, you may be able to see a bit of an upswing in the VIX. And you guys know when the VIX is high, it is time to buy. And the tool that I use to buy is selling puts under the market. So Very tough to say which way this one will go, but as volatility expands, you guys know the drill. Selling options could be a very profitable endeavor if you know how to do them. And if you watched my top 5 options video yesterday, well, you probably know which companies that I am going to be interested on for selling puts on in the event that we get a bit of a market sell-off after the Fed, right? Moving on to the yields, we've talked about yields all video, but without actually doing analysis on the chart. So, I mean, this is pretty obvious, right? It's inverse head and shoulders, and sadly, the bulls are losing the weekly downtrend, which we've had since the month of May. Now, this is unfortunate, but we did talk about it. It's a very complex trade, guys. It's a very complex trade. There's tons of moving parts, but usually when you see the longer term yields move in opposition to whatever the Fed is doing, that's the bond market trying to either call the Fed's bluff or say they're wrong. So we've seen an uptick here since the end of quantitative tightening, the bond market not agreeing maybe that it's the right time to do so. And also we've seen an uptick since we've got the rate cut odds back up. So maybe the bond market also doesn't want to see the Fed cut interest rates because maybe they don't believe the economy warrants interest rate cuts right now. And that has also been the points of contention from a few Fed members. The fact that they don't want to cut interest rates because the economy is just not soft enough to warrant that, right? They're still worried about inflation. And maybe the bond market is also still worried about inflation. So this one is a very complex trade, but suffice to say, when the bond market is very choppy like this, longer term yields are very choppy like this, other segments of the market will be very choppy. And we talked about those utilities, real estate, and several sectors that really rely on these interest rates, such as consumer-facing companies as well, really rely on this, right? So we'll see what happens after Wednesday's meeting on these yields and on the bond market overall. But the bond trade has just been excessively choppy all year, guys. It's been a very difficult trade because every time that we think that we can get some room here and really start, uptick and upswing on the bonds and finally started bringing these longer term yields down, something always happens, right? The bond traders get, they intervene and they carry these yields higher again and they just unwind, weeks and weeks and weeks of works in a very fast move. Moving on to gold right now. So gold also, doing a whole lot of nothing, right? So the gold trade right now really starting to lose a little bit of steam. And what has me not concerned, but what we've been talking about is the possibility for something like this. When you get a very hot gold move, overbought conditions, you don't necessarily have to plunge to reset those conditions. Sometimes you just have to move sideways for a while and cool off the biggest time frame of them all, which is the monthly. And we're still monthly overbought. So the reason you're seeing possibly gold struggle up here is because you might be just running out of buyers. You're running out of incremental buyers here. Retail, a lot of retail thinks the price is high. Central banks have kind of tapered back their spending on gold as well. So gold has just not been seeing the big follow through, right? See, this was a big move, a fast move, right? And now it's getting slower and now kind of hovering around here. So we'll see what happens, but the higher lows now are kind of set right here, 41.64. If you lose that, once again, it's consolidation. You'll go for a bit of a weekly downswing. You might just get trapped in some form of an awkward range. So personally myself, I've closed my gold long. I had options out of the money options. So even though I entered here, we exited break even because we've burned about a month of time. And sadly, we've just kind of come back slowly but surely. So we've burned a bit of volatility. We've burned a bit of time as well. So I took my contracts off at break even. If it just explodes to the upside, so be it. But if we get trapped in consolidation, I do not want to really get trapped into consolidation. I'd rather revisit this trade maybe when the price action gets a bit more favorable and provides me with a better entry. But as of right now, we haven't really lost anything, right? It's just been moving very, very, very slow. So if you're trading gold futures and stuff like that, you arguably have nothing to worry about. Your stop loss can still be break even from entry right here, but any options have kind of gotten a little bit burned on time decay and a little bit of volatility decay as well from this move thereafter. So I do believe that the policy discussed on Wednesday will also impact the price of gold, but gold obviously has just been moving a bit awkwardly and a bit slow despite the bulls still being in control of this weekly, which is kind of slowing down a little bit. So no big red flags as of yet, but still just something to look out for, right? Just a slowdown in price action recently, possibly anticipating what the Fed's going to say. And lastly, Bitcoin and Ethereum before we get into our big tech stocks, right? So Bitcoin and Ethereum doing nothing. We had the nice daily uptrend shift, and that's when we possibly were able to enter some swing trade longs, but with a stop loss below here, because we know that although we had the daily uptrend, what the problem was is that this is a massive weekly downtrend and we need to get a solid bounce. They need to continue this daily uptrend at least into a weekly 50% or 618 bounce, right? If you want to have a chance of reversing the weekly time frame. and possibly being able to say that this is indeed a monthly low and that you're going to be going for the expansion of the cycle. So far, Bitcoin has been doing absolutely nothing. We made these highs, we came down Thursday and Friday, and we've been doing absolutely nothing. So pay attention. Your point of control is still down here, 84. Lose 84, guys, and it's not going to look very good at all. As a matter of fact, right now, you could make an argument that it kind of looks a bit like a bear flag, right? We never really captured back the essence of support by closing above it. We're still within it, so you can argue its resistance. It's looking like a bear flag currently. The bulls need to keep this daily uptrend alive. So as of right now on Bitcoin right now, I do not have any short-term swing positions. I'm adding to my Bitcoin long-term positions, but no swing trades. The price action is just a little bit too choppy for me. And we know that we took back a big portion of this move, right? So that being said, pay attention to this level on Bitcoin. It is the line in the sand. And the same thing can be said about Ethereum. The line in the sand down here, 27.25. The bulls are looking to expand, right? But just have been doing absolutely nothing since they tried that move last week. So still some awkward consolidation. It's a risk on asset. And we know that the risk on trades have not been moving super hard recently. And now in terms of the size of this retracement, right? Look, 4 weeks, huge move down. Last 3 weeks, bit of a move up, but very soft, right? This is only at the current stage, not even a 30% retracement. So obviously, if you start challenging your line in the sand level, it's not going to look good, right? You can assume this is a bear flag and you might just be going for a bit lower. So Ethereum, I am bidding progressively, DCAing for some longer term positions, but very slowly, very casually, because we don't know how fast this next move is going to come. Is it going to come slowly with a long-term monthly uptrend reset? Is it going to come fast with the move on the risk on assets? For that, you're going to need a very bullish policy statement on Wednesday as well, right? Or, you know, you're just going to need a rekindling of the risk on trade. And I think right now, the problem is that people are just too nervous. There's too many competing narratives, right? We talked about this many times. This is the reason that Bitcoin's not flying, right? And Ethereum as well. There's just too many short-term bearish narratives right now. The concern surrounding AI, the concern surrounding some of the technicals on the indexes, the fact that we haven't really had a 10% pullback in a while, the jobs especially, right? The status of the consumer is very confusing right now. The sentiment is awkward, but the banks and the credit cards reported good earnings. You know what I mean? There's the yen carry trade as well. So we do have bullish tailwinds, but the short-term narrative is very cloudy, right? Risk on assets run the best when you don't have a majority of all this kind of front and center, right? So keep that in mind. That's why Bitcoin and Ethereum are kind of struggling to break out right now. And that is everything for overall market rundown. As we always do on Monday, we spend a lot of time talking about the indexes, talking about the narratives, and how everything kind of is intertwined. So hopefully that analysis helps you out in terms of your risk on, right? The bull bear scale essentially for the fear and greed, right? Right now we're sitting at about 31, still in a fearful environment. And we know that Wednesday is a big catalyst. So I'm not very heavily positioned into Wednesday. And in terms of my positioning into 2026, not all in, right? I have very good plays for 2026, but nowhere close to being all in, right? So a bit of a reservation from me as well. I'm still bullish in the markets, but I do understand that there are some bearish short-term catalysts and some bearish headwinds that we have to make our way through before we can truly say that, yep, market's ready for a big leg of expansion, right? So that being said, let's move into our big tech names right now. So first off, moving into Apple. Apple is doing exactly what we thought it would do after coming into daily overbought conditions, which is just a bit of natural consolidation. Support level is still put at where we just previously were, 275 down to 266, and your higher lows for the uptrend are down here at about 266. So tons of space for the bulls to kind of mount a bit of defense here and try for the recovery. But if you take back too much of this move, guys, you know what might end up happening, right? It may lead into a larger form of consolidation, which would be very normal. Weekly consolidation for Apple. It's been a bit weekly overbought right here. That being said, the bulls might be getting a bit tired up here. And as a result, I'm not really looking to position. It's a very greedy trade going long Apple up here, right? Weekly is overbought, monthly is super extended. So I'm not looking to swing trade Apple up here, not at all, but I do think they'll have a good Q4. At least that was their guidance. And right now we have a bit of a duality here whereby it looks strong, but the technicals are very extended and the fundamentals are very extended as well, which is why I'm not adding to any Apple shares up here for my long-term portfolio. I'm just holding and not initiating any new swing trade longs. But if for some reason Apple does pull back here a level or two, down to maybe the 250, joining up with previous all-time high resistance and maybe the 12 EMA, maybe then you can get me interested in a bit of an Apple trade, and maybe then everything will make a bit more sense. But for now, no participation on my end. Moving on to AMD right now. AMD up 1.44 and a bit more in the after hours because of that Trump announcement with the NVIDIA H200s. Now maybe AMD will also be able to sell some chips into China. But overall here, we've been kind of weak, right? Doing a whole lot of nothing. A whole lot of nothing. Big volatility. This entire section here was huge volatility. And now the volatility has kind of just vanished. You know what I mean? So it's been a nice daily uptrend. Your higher lows are here, 211.58. If you flush that, sadly, daily downtrend resumes, and you're just going into another weekly leg of consolidation. Healthy consolidation, at the bottom of which could maybe be this area right here. 190 to about 175 would be the target zone. So please keep that in mind. And that would just be an extension of your monthly consolidation phase 2, which would be very healthy for AMD. I'm not willing to call it either way. Of course, we can just break to the upside because the bulls do control these short-term timeframes right here, but you kind of need them to get a little bit more steam here, because V-shaping this is going to be somewhat tough, especially if it's not the most risk-on environment right now. I'm still bullish on AMD. I'm not positioning anything new up here. That being said, if I wanted to buy some shares for the long term, I still would consider them, especially, you know, from here down to like the 200 to 190 range. This is the pocket that I really wouldn't mind buying some shares because the valuation down there is quite fair. 32 forward PE, a 0.91 PEG, a 7.5 price to sales, and all of that with beautiful revenue and expansion metrics for the next few years. Moving on to Amazon right now. Amazon continues to do a whole bunch of nothing. Rejection from resistance, 240 down about 230. We knew that the bears controlled this trend, right? Daily downtrend. This was a very nice bounce overall, very nice bounce, 618. But now they got to do step number 2. Got to get the daily uptrend back. So right now, just consolidation. But this one was on my top 5 options play yesterday, and I was saying, if we do consolidate a bit more, there's a perfect order type for this. When you're just all sitting around doing nothing, there's 2 things you should be thinking of if you are bullish on Amazon. Number 1, selling put options towards a support area, which is something I did do today. And number 2, possibly looking to accumulate some longer term shares, because although we don't have the uptrends just yet, although the weekly is very choppy, the monthly is also in some form of awkward consolidation mode. Let me just zoom in. Sorry about that. We are in some form of awkward monthly consolidation mode right now. The valuation on Amazon for a forward basis is quite attractive. 28 forward PE, a 1.4 PEG, and beautiful earnings. So although the price action shows that we've given back all the earnings move and are just doing a whole bunch of nothing, it is a decent time to add some long-term shares to our long-term portfolios if we believe in Amazon, and also maybe to be utilizing some order types that are perfect for consolidation periods, such as selling puts under the market. Moving on to Google right now. Google down 2.37%. Not major news. There wasn't any really major bad news on Google today, but we obviously know, right? Google's been very extended. It was daily overbought conditions. It was weekly overbought conditions. To a certain extent, it was also monthly extended conditions on the RSI, right? Everything very overextended. So when we see overextended technicals, it may not be the best thing to position up here. Matter of fact, I was saying, if you have a trading portfolio and you've been riding Google for a long time, it may just be a nice opportunity to pivot some Google gains into other aspects of the market that have been kept somewhat low. That being said, the price action is currently favoring the bears. We are breaking down below. We haven't lost the 12. One more red day though, and that's it. Google daily downtrend and possibly the start of weekly consolidation, which may take you in somewhere close to the 12 EMA and the previous area of price action that would make a lot of sense, which is indeed the whole 290 down to about 275 location. We will see if we get down there, how much we're able to cool off the time frames, and whether or not the bulls are able to play defense down there. But Google is definitely not something that I'm looking to position in up here at all. That being said, I'm not selling any of my long-term Google shares because I'm holding them for the next 5-10 years. At 320 where we are right now, the valuation is not terrible, but there are better deals right now in the market on a pure valuation sense alone. Moving on to Meta right now. Meta down about 1% overall, but we haven't really done anything since the Thursday candle, right? So we're almost into resistance, which is 700 down to about 680, let's call it. The area that previously was big support and then resistance, right? That's the closest area that we do have above us right now. The bulls will create a lot of room right here. It's a nice daily uptrend. The higher lows are planted down here, 640, 638, let's call it. And down below, we have nice support and the EMAs as well. So the bulls do have a lot of space if they get tired up here to kind of recapture some momentum by placing the downswing into a next new upswing. Of course, if you just try to break through there, you got a lot of resistance in your way, right? So Meta right now in the weekly, it's not looking too bad. I mean, it's a 50% retracement, right? So any weakness, you can make an argument that, the bulls have covered enough ground to maybe reverse this into 2 steps, right? That being said, Meta right now, although the short-term price action is somewhat awkward, right? We're no longer towards the lows to benefit from maybe some swing trades, but do we have a possibility to position for the long term? I really do think so. Around the 630 mark, we know that we're very low on the multiple here, 21 on a forward PE and a 1.63, which is a very decent PEG ratio overall. So I would not mind picking up more Meta shares down there in this little pocket for my long-term portfolio and or leap call positions, right? But shorter term swing trades for some expansion here directly into resistance when my stop loss is all the way down there, not the best risk to reward, not as good as it was when we previously talked about when Meta was kind of breaking out back here, right? Moving on to Microsoft right now. Microsoft, not a bad day, 1.63% to the upside, but coming in to big resistance. Yeah, that area is 500 down to about 490. So you can see the bulls are trying to go for the daily uptrend after being stuck in this downtrend for a while. They're trying to go for it. It remains to be seen whether or not that's going to happen or not. Okay. Obviously, if Wednesday is a bad day for the market, you will get rejected and you might just go into the next weekly leg of selling. We know the bears have been in control of this right now. The bears are looking for this to be a bear flag, right? Just a lower high into resistance and lower low. If that does happen, you guys know what I'll be doing. Still buying Microsoft and still selling puts under the market. Selling puts down here, 460 to 450 range, and also accumulating some shares. 470 down to 450 is my pocket of accumulation because the valuation makes sense down there. It's under a 30 forward price to earnings, which is fair, and a 1.66 peg as well. So Microsoft has went from expensive to somewhat manageable. And while it is somewhat manageable, I will be adding some shares, right? But no short-term swing trades for me on Microsoft, not into this resistance area. I'm a bigger fan of waiting for maybe the breakout retest trade and show me that you want to claim this huge level. It's a big level, man. That's huge resistance from July, right? So we need to claim this first if you want to see me do any swing trade longs on Microsoft. That's just the way I do things. Moving on to Netflix right now. Netflix, obviously, just getting crushed by all these news headlines. Netflix can't catch a break, man, right? They bid for the deal, they secure the deal, stock goes down. They get outbid by Paramount, stock goes down. Of course, the reason that they're down today, even though they got outbid, is because, well, people might be anticipating Netflix to go over the top of Paramount's bid, which would put even more pressure on this company. The more money they spend for Paramount, the more money they spend for Warner Brothers, well, the more that shareholders might have some concerns with that. That being said, daily oversold conditions right now. And it's always the case, right? If you're looking for a high quality company to pull back 30% from its highs, you're going to need a pretty potent narrative to have that amount of pullback, right? So although Netflix is currently in a daily downtrend, daily oversold conditions, we are coming into the next line of defense of support right here, which is 90, let's call it 100, down about low 90s, right? This is an area where I definitely want to be participating on Netflix, right? Anytime we come between the 12 and 26 EMAs on Netflix in the context of bull markets, you see it many times in the past, right? The 12 EMA is an area where I start my bidding, and then I'll follow through towards the 26. So this little pocket right here, call it low 100s down to low 90s, is an area where I do want to participate on Netflix in 2 different parts. Number one, I'm doing leap call options with 2 years of time just to allow myself to have enough time to get through this narrative and let Netflix's fundamentals kind of take over again, right? But also long-term shares. I'm a big fan of buying long-term shares for my long-term portfolio here. We've been waiting for this pullback for a while. It's 30% off the highs, and in around 100, the valuation is now manageable. Under 100, you're now under a 30 forward price to earnings, which is fair, and a 1.54 peg, which is also very fair in light of Netflix's growth opportunities into the future, and even selling puts, as we were talking about in the top 5 options play, right? Top 5 options video yesterday, is a nice consideration for the mid to low 90s area. Moving on to NVIDIA right now. NVIDIA doing a few things, right? NVIDIA, watch a couple things here. MACD crossing to the upside. The bulls are going for the daily uptrend break, which is a reversal of this massive daily downtrend that they've been in for the past month or so, right? And we are also in confluence with support. We've reclaimed support. We're trying to reclaim the moving averages. If NVIDIA pops up here, it's going to be looking very good. A bit of a momentum shift for NVIDIA, of course. Now, all that can change if Wednesday's Fed meeting is a disaster for the markets, right? But NVIDIA, we've been talking about this for a while, man. It's been consolidating here. The GTC sent us above, and now we're back down here into consolidation. So how do we play consolidation? 2 different ways. selling put options below the market if you enjoy that price, but also some longer term shares, right? So we've been very firm on this on the channel. NVIDIA around 180 is a decent proposition. It's a mid-20s priced earnings on a forward basis and a 1.15 peg. So you are not really overpaying for NVIDIA in light of its forward guidance, at least not at this current time. But if you do see any weakness, I'll be taking advantage of this one to sell some put options down here under 170, close to the monthly 12 EMA, which would just be a very nice monthly higher low. And it's also the 200-day EMA as well too. So this is the area that I'm interested, but buying shares here, just nibbling at some shares for NVIDIA and also selling some put options are the two things that I'll want to do in the near-term future. Now, a few more before we're done. Tesla down 3.4% overall today. Now, there was a piece, Tesla was down today. Now, there's some delivery expectations, yes, but there was a curious piece on Tesla here. Let me just go and see if I can find it. I don't want to spend too much time on this, but there was a Miami Optimus robot event today, which was pretty funny over the course of the weekend. So there was this Tesla robot handing out water bottles, and then it did something. I don't know if it's in this video, but let me just see if I can find it. I don't know. But anyways, eventually it kind of made a motion to like take off a headset and then just fell back over. I don't know if you guys saw that one. If I can kind of find it here. I guess they're only, oh, this one right here. He takes off his headset and then he goes down. So there's people saying like, you know, that maybe there's a teleoperator behind it, even though Elon Musk is saying no. So there's a bit of drama surrounding that on Tesla. You know, what would Tesla stock be without the occasional bit of drama, right? That being said, they're down 3.39, coming back into support. 430, 425, down to about 415 is the area of support. Big previous support back here. Daily uptrend is nice. We'll see if the bulls can play a bit of defense down there. And the weekly is also looking very good for a nice engulfing move. If you consolidate a little bit more, wouldn't be too bad. But the bigger area for Tesla, guys, is down here, 400 down to 380. That's where the larger swing trades could be possibly placed, as right now the price action is largely going to depend on the result of the Fed meeting coming Wednesday too, because we know that Tesla moves a lot with the interest rate decisions as well. So no short-term swing trades on Tesla for me here. And if I were looking to sell any put options perhaps on this company, if is a big if, right? It'd probably be down below here under 400. Moving on to Palantir right now. Palantir still battling with this resistance range, yeah? The bulls have put in a nice bounce from the lows. It doesn't look like much, but this is a very nice 22% bounce into resistance right now, 185 down about 170. So we'll see what happens with the short-term price action because the bulls are trying their best to get the daily uptrend back, continue this daily uptrend overall, and just make a bit more of a weekly push because they got to get a few things back here. Number one, they got to get the weekly uptrend back. We lost it, and now we have to get it back. The V-shape will be somewhat unlikely. In my opinion, maybe the two-step process will be a more likely situation for Palantir. Now, I'm not adding any swing trades on Palantir up here. I'm not adding any shares up here on Palantir. I'm not doing any leap call contracts on Palantir. But if, and it's a big if we somehow unwind this entire move and go for more consolidation, I've been very clear. My area for Palantir is 150 to 140. I'm not saying we're going to get it. If we don't get it, I'm fine. I still have Palantir shares. But if we do get it, that would maybe be an area that I want to play. I do not want to really play this area up here, though. The valuation is very rich, suffice to say, right? And if you're a long-term shareholder on Palantir, I mean, you're holding for the next 5, 6, 7, 8 years and hoping that the company kind of grows into its overall valuation. If not, it's a tough ask to ask people to buy shares up here if you don't have that long-term view. Moving on to SOFI right now. SOFI still unable to kind of shake that dilution candle that we had on the Friday session overall, but the price action not looking terrible, right? We're just caught in a very wide and awkward range. Now, the bulls are trying to go for something here. You can clearly see it, right? They're trying to go for the daily uptrend shift. We got rejected at resistance 30, at about 28. That being said, they're trying to set up some higher lows. I mean, there's not much here. I guess you can argue that there's an interim level right here, and I would agree. But let's be honest, the bigger level is kind of down here at 25 to 22, right? It's the big previous all-time highs from a few years back, and it's also the areas that the bulls have said no more a few times during consolidation events since the month of September. So the way that I'm playing SOFI is very simple, guys. I'm just selling some put options down here, writing some put options around the 25 to 22 range, and pocketing some premium if they come down there and pick me up. Beautiful. That's where I want to buy shares in the first place, right? Would I be adding to any long-term shares here around 27? Well, it's not the worst proposition, right? It's trading at a 1.1 forward peg and a 7.4 forward price to sales. I do believe in SOFI's ability to become a $50-60 billion company by market cap over the next few years, but it may just not happen overnight. So we will see how this price action plays out. As of right now, since it's very choppy, I'm not doing leaps or anything, right? But what I am doing right now is selling some put options, and I am definitely not selling any of my long-term SOFI shares that we kind of acquired during this whole dip cycle back there. No, I'm just kind of holding everything right now. I'm not adding necessarily any more because I'm pretty full on SOFI, but would there be an argument to be made to adding some SOFI shares here if you have a long-term vision and you're looking for the market cap expansion? Yeah, the valuation is not that bad at all. And now lastly, moving on to our two last companies here. Uber, number one, Uber up 1.4% on the day. Nice recovery here by the bulls. Daily uptrend and kind of coming above our big area of previous support, which was now resistance. And we're kind of breaking above that right now. So the higher lows are set down here, 85.72. So any move lower, looking for a new higher low. And this is what I mean, right? Now we can kind of use this area as some support, use the 200-day EMA, which is the green line, as some support to maybe establish a new floor and maybe undo this weekly downtrend one leg at a time. And maybe this was your monthly higher lows and you're looking for a bit more, which is why I was saying this back test right here was perfect for two reasons. Number one, great for selling put options. And we made some decent money in the Discord selling some put options down here. But number two, it was a good opportunity to buy some shares. We talked about it while it was down there, right? Low 20s multiple PE and a 1.5 peg and a 5% free cash flow yield. So maybe you guys are able to add some shares. If you were, congrats. If not, if you get a bit more of a dip, maybe that would be, kind of another opportunity, as it will take maybe some time to reverse this weekly into an uptrend and really get some motion here into the monthly uptrend as well. So any further weakness on Uber, I'll be looking to sell some puts and maybe add a few more shares. And lastly, TSM. So obviously the news on NVIDIA was a bit bullish for TSM today. TSM though, I mean, let's be honest, right? Even though the bulls have had a really nice upswing recently, daily uptrend, we're still kind of trapped, right? Trapped in price action, but it does not look too bad. At this stage, the higher lows are right here, 283. So any move lower, looking for a higher low, going for an upswing, maybe into the all-time highs, 308. Hey, TSM, back above 300, man. They had the weekly downtrend. We came perfectly into the 12 EMA on the weekly, but not so much in terms of monthly consolidation, right? They really didn't give us the big monthly consolidation that I was kind of looking for to position a bit more heavily into TSM. That being said, I'm not selling any TSM shares up here, but I'm not really adding any more either, right? At 295, the valuation is fair, 28 forward PE, a 1.7 peg. So it's not expensive. So I'm not selling anything, but am I full building a position up here? No, because the fundamentals do make sense, but the technicals still remain a little bit stretched, right? So this is one trade. This is one chart that I like to show you guys, right? I like to find charts, just me personally, right? You guys are free to do whatever you want. I like to find charts where the technicals and the fundamentals line up, right? Where my technicals, pulling back on Amazon, something like that, right? They line up with the fundamentals. I get a relatively cheap valuation in terms of historical precedent, but I also get a decent technical entry where we're not really in monthly overbought conditions and the price is not stretched from long-term moving averages. So TSMC, although it's one of my favorite companies in the market and it's a big position for me in my long-term portfolio, I'm not really doing anything up here because it's not giving me the best risk to reward entries. Hopefully that does make sense. But as of right now, the bulls are looking good to possibly reset this into a weekly uptrend if that is the course of action that the market allows them to take. That is everything for your overall market rundown, guys. Hopefully you enjoyed. It's getting a little bit tight on time here. I don't know if I can do a portfolio review. Maybe I'll have to save that till tomorrow. But I want to cover some names here on the biggest gainers and losers of the day. So we won't be doing all the companies today, but I did want to cover just a few for you guys as well. So number one, Marvell. Marvell coming down 9% today, finishing about 7. They did not get inclusion into the S&P 500, which made a couple people disappointed, of course. They did have really good earnings last week, I will admit that, and now giving back a little bit. Now, Marvell is an interesting situation. It kind of reminds me a little bit about Micron when the stock was kind of underappreciated from the market and was trading relatively cheap. You can see here that at $92, they're currently trading for a 26 forward PE and a 1.03 peg and a 7.8 price to sales. Huge revenue and EPS growth, but a lot of that is going to be coming into the next few years, guys. So Marvell could be interesting. This is kind of like the same setup as AMD, to where 2026 is not going to be their biggest and best year. No, that's probably going to be 2027 and 2028. However, if you are looking for a semiconductor company with very strong growth metrics into the next 2 years, Marvell could be something very interesting to consider, whether you want to sell put options down here with some good volatility, or you wanted to start to position for some shares and just go for the big boom. It may not be the worst proposition in the world in terms of semis. Not all semis are built alike, right? But whenever you see these very fast and very high growth stories like Micron, to where it's kind of underloved in relation to what it can do in the future. AMD was in that situation as well, right? And Marvell is kind of reminiscent of those few plays. So not the worst opportunity in the world to build into this position. If you are looking for a semiconductor name, of course, do your own research in terms of who their partners are, such as Amazon and things like that, right? But 2027, 2028 could be some really strong years for Marvell, and the stock price definitely does have some room to move up a little bit higher. Now, that being said, another company which would maybe be of interest to some of you out there would be Elf Beauty. Elf Beauty, I'll be looking to maybe sell puts down here if I can find maybe some 60 strikes for some short puts, right? We know that the bears are in full control of this one. And if this indeed is just a very small lower high bear flag and we move a bit lower, I'll be very interested to add some long-term shares to my Elf position down there. Other notable mentions, of course, could include something like a Nike, right? Nike, same context, been a very nice sweeping downtrend. Nike has earnings, guys, coming up next week. So I'll be waiting for this one, but just have it on your radar into next week. If I can pick up Nike in the lower 60s, maybe this is going to be one that you may see me build perhaps some leap calls into, or maybe some share positions as part of that whole consumer retail recovery trade that I was talking about early on in today's video. I know Nike has its own set of execution risks problems, their inventory problems, their stale style problems, et cetera, but Nike would be one just for the brand power alone that I would not mind positioning into 2026 and 2027 overall. 2025, I mean, to call it a transition year would be an understatement. It was a hell of a transition year for them, but I mean, we're still trading at like 2016, 2017 prices right now. So just pay attention to it overall, you know, type of thing. Moving on a little bit further, we talked about most plays on this list previously, so I'm not going to bring up more plays than that, but we'll pay attention to Adobe earnings, right? Adobe is another one of those stocks, kind of like Salesforce, that's been trading really low in terms of historical valuation, but nobody wants it because there's this black cloud overhang above it in terms of, is AI going to disrupt their entire business model? So we'll pay attention to Adobe's earnings on Wednesday. We'll see how they go, but Adobe and several other software names have just not been doing too good. And we'll cover more software names tomorrow in the names of SentinelOne, names like Rubrik, names like UiPath, which had beautiful earnings. We'll cover those tomorrow and kind of just paint the picture for the software landscape leading into maybe 2026 as well. That being said, I don't want to cover too many names here because we're kind of a bit tight on time. And believe me when I say a lot of these names, especially the risk on names, will kind of shift sentiment leading into, the Fed meeting and after the Fed meeting overall. But those are just a few of the ones that I'm watching. A special shout out to names like, CoreWeave, NBIS, and Iris Energy. They've been having some nice upswings as of recently. But of course, there's going to be a lot of pressure coming into that Fed rate meeting as well, because they do represent a good portion of the risk on trade. I wouldn't be surprised if NVIDIA's bullishness carries these names higher into tomorrow, but I'd be careful about going all in. You guys know how I'm playing CoreWeave, Iris Energy, or NBISs. These are just accumulation trades for me for long-term portfolios, right? DCAing into them, building positions that I want to carry into the actual build-out phase for these, because we know these are this is like a multi-year thesis, right? A lot of these revenues come online 2027 and 2028. So we should be building into these slowly, right? Possibly just DCAing every few weeks or so. You'll buy some here, you'll buy some here, you might buy some down there, but you're looking to accumulate and build a position kind of like the institutions do, rather than trying to clip the absolute bottom and going in all for one price, right? So we don't have that much time to cover these names today, but a few notable mentions to the upside. I mean, ALAB, a very nice play in line with data centers. My data center play that I'm kind of looking at recently is ANET. ANET's been having a really nice pullback here, as you can see, monthly higher lows. So building a position on ANET down here, not the worst proposition leading into 2026, 27, and 2028. But shout out to ALAB. I've played this one a few times in the past. They're also kind of doing a similar pattern overall. I know they're not exactly the same style of company at all, but it just makes me think of another player in that space. And I would personally rather go with ANET over and above ALAB if we're kind of comparing between different niches, different types of companies in the semiconductor niche. So those are just my easy thoughts on something like that. Shout out to CLH as well. I mean, CLH is having a nice rally from the bottom. I'm not really playing CLH, but if we get a bit of a drop down into here, you might see me playing the wheel on it. But shout out to CLH. We covered their earnings when they did have them. Fairly decent day for them, but they are lumped up with the consumer retail trade overall. And you know, if soft drink sales have been soft, no pun intended, if energy drink sales have been soft, I mean, good thing they have Alani, because without Alani, the Celsius brand is not really putting in big numbers, right? Celsius is only doing 13% year-over-year growth in terms of their own brand. Rockstar 14%, which are okay, right? They're not bad numbers. But Alani is doing a lot of the heavy lifting here. And that gives me a bit of pause, you know what I mean? Like, if Alani slows down into early 2026, what's going to happen with this company? Now, I don't have any positions. I don't have any skin in the game for Celsius Holdings to the upside. But I do think if we're looking at growth companies, there are probably better names out there. But you know, objectively speaking, is CLH a bad buy down here? No, but it just depends how much do you actually want an energy drink company in your portfolio, right? Arguably, they're at the top end of their total addressable market unless they do further acquisitions or further international expansion. I mean, they've gained a lot of market share recently, so now it's a question of just putting out big year-over-year sales. Moving on to other names, I mean, Rocket Lab, you guys know we're positioned in Rocket Lab. Personally, I have a bit of a swing trade going. She started here. Take profit for me is going to be 55. So not looking too bad on Rocket Lab. Rocket Lab is a long-term play. Keep in mind, you'll be going for the eventual launch of their Neutron rockets. I like this one. If they give us another entry opportunity down here, 40s, I mean, having this as part of like a growth segment of a portfolio that you're looking to hold in 2027, 2028, similar to how you would kind of treat a Marvell or an Iris Energy or even a Robinhood, right? Let's be honest, right? If we're buying these names, we may not get the same level of bullishness, of pure bullishness that we got early 2025, right? Maybe these embark on a more naturalized path of expansion, considering the fact that, well, the hype for the overall risk on trade is kind of gone, right? But they do have big revenues coming in 2027 and 2028. A lot of these companies are the same thing, right? They've had huge rallies, even Celestica, you know what I mean? They've had huge rallies, and maybe now is the time to just build positions slowly that you want to carry into the next few years. Shout out to Duolingo. Duolingo's kind of back a little bit. I mean, a little bit, right? They're up 4%. They're up. It doesn't seem like much, yeah? But Duolingo is indeed up 24% from the lows, but the damage has been done, right? The monthly uptrend has been completely unwound. You could argue that, yes, indeed, we clipped in a support, and now we're arguably clipping into resistance as well. 240 down about 201. Is Duolingo a good buy down here? We've talked about this one so much. You know what's funny? At 205 right now, you're still trading for a 43 forward price to earnings, a 9.3 price to sales metric, and a 1.34 peg. So Duolingo, is it ridiculously cheap? To be honest with you guys, no. Like, there's a few companies I just showed you, right? Marvell is arguably cheaper. You know what I mean? Several other big tech companies, even just like Meta. Meta is effectively cheaper on a pure price to earnings metric than a Duolingo, right? Not so much on price to on the peg ratio, you know what I mean? But overall, are certain metrics for Meta cheaper than Duolingo? Yeah, and that's what's absolutely hilarious about this company, right? And also this one has the AI overhang, right? So Duolingo, I'm not participating, but if you guys are, best of luck to you, of course. And UiPath, Rubrik, and the other ones we'll kind of cover into tomorrow. I know I've kind of jumping all over the place here for our biggest gainers and losers, but I don't want to overcommit to technical analysis because you have a huge volatility event on Wednesday, and it's going to wildly possibly change some of these short-term either downtrends or uptrends in this name. So we'll revisit these trades Wednesday. Shout out to ASML, solid long-term company. But if you want to know if I'm buying any more ASML up here, the answer is no. I'm just kind of riding all the shares that I do have. So that being said here, guys, it's kind of all the rundowns that I want to give you guys. I mean, several of these trades, like Rocket Lab is not Rocket Lab, right? Rocket Lab is a representation of the risk on trade. It is Robinhood. It is Palantir. It is the EOSEs of the world. It is the let's call the quantum computing names that we covered last week, right? All of these represent, and Bitcoin, they represent the risk on trade. If you don't have massive risk on positioning further, right? Well, these names may not give you that style of lift that people got used to, right? On this name, on names like Bloom Energy, on names like FLNC, right? Names like NBIS, et cetera, et cetera, et cetera. There's many of those names out there in the market right now, and it is indeed the risk on trade. There are some good opportunities amongst the bunch, right? Like APLD, CIFR, just the other few key names, right? But will we get this? That's the question. And I don't believe we'll get another round of this until we clear up some of the short-term bearish narrative. So as a result, if we're interested in some of these names, we should be bidding near the lows, right? But am I positioning very aggressive for a crazy other, 1, 2x in a short time on these prices? Not yet. I don't believe they're ready for that just yet, but interesting to position on the lows in any weakness, meaning if you get post-Wednesday weakness on all these risk-on trades, build a shopping list of some of the risk-on positions that you want to carry into 2026 and 2027. But that is everything that I had for you guys today in today's video. If you guys enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday through Fridays after the close. And last but not least, if you have any questions, please feel free to leave them down below in the comment section, guys. Wishing you guys a very nice Tuesday. But if you ask me my opinion, I wouldn't be positioning too heavily into the Wednesday event. I'd probably just sit back, wait for it to happen, see where we stand in terms of the projections, and thereafter we will talk about positioning. So take care, guys. Have a good day tomorrow. I'll see you after the close. That's it for me. Peace.